This is going to be the last breaker structure video you're ever going to watch because I'm going to break down what is a breaker structure, how to identify a break structure, and how to enter off a break of structure. My name is Moby. I've been trading for the past 6 years and I've accumulated more than 6 figures in these markets. But not only that, I've also helped many other traders in the past and helped them reach their goals as a trader. And so in this video, I want to break down exactly what the big issues are with breaker structure, how to actually see them, and then enter off them without making any mistakes. So let's go right to the basics and actually understand what is a break of structure. Now, in simple terms, a break of structure is when price is continuing a momentum to a bias. But if we had to visually see this, we all know how a uptrend looks like. We have to create higher highs and higher lows. And likewise, for downtrends, we have to create lower lows and lower highs. Now, every time we create a high in the markets or a low in the markets, depending on the trend, you will notice that in order to create a higher high, we have to break the previous high. And so in the word break of structure, we have to break the previous high in order to make a new high. So if we draw a line from this high, you will notice that we had a big push to the upside, breaking this. So where I mark up X, breaking this, as soon as we break this, this is where our breaker structure would occur. And then again, right here, where I mark X, that would be the breaker structure. So we marked up all the highs. You will notice to continue an uptrend, we would have to break structure. And likewise, in a downtrend, it's very, very similar every time we create lows. Again, continuing that momentum to the downside, we now need to break structure. So if we draw a line on every single low, like this, if I mark up X, every time where the X is, that is a break of structure. Now, it's very, very easy to see on a line graph where the break of structure occurs. However, we now need to notice this on candlesticks. But before we get on to the candlesticks, we need to understand that every time there is a break of structure, that is a momentum to a direction. So if we're going up and a high gets broken, that is a momentum to the high. And if we're going down and there's a break of structure and there's a new low, that is a momentum towards the downside. So most of the time, whenever there's momentum towards a direction, that is most likely where the market is going to be heading towards. So every time there is a high and we break it, we are most likely going to be continuing and pushing forward. And so that is what a breaker structure is in simple terms. Now let's advance to actually identifying them on the chart and making it a little bit easier for us to see. So as you can see on this chart right here, it is quite difficult to depict a breaker structure. Now we can just get an indicator that will dictate us where a breaker structure is, but I'm totally against indicators. Indicators are delayed. Indicators sometimes will give you misinformation. And also when you have an indicator, you're not actually looking for anything anymore. Let's say, for example, a breaker structure. And so what would happen is you rely on this indicator, and if it does give you the wrong information, you will not be able to verify it, meaning that you're kind of crippled in the market. So it's very, very important to actually know what is a breaker structure, where it is, and how to actually identify it. So in this case, what I'm going to do is I'm going to mark up a random low or high. As you can see, we don't know whether the market's going up or whether the market's going down. So I'm just going to pick a random area in this market and we're going to break this market apart and actually understand it from one candlestick at a time. So what low stands out to me right now is this low right here. This low stands out quite a lot for me because this looks like the lowest point in the market within this time period. And so we're going to start off from here and we're going to make our way towards price action where it is currently right now. In this case, when we create a low, the next step for us would be, okay, we need to identify a high. We need to see whether a high has been formed after that low. So we're not looking at the previous high, we're looking at the next high after that. So as I can see following this chart, we got 1, 2 candlesticks, and the third candlestick comes down, brings a low. So as soon as we create a new low right here, I now know that there must be a high between this candlestick and this candlestick. And so as soon as I can see that, The next thing I'm looking for is the highest point between these three candlesticks. And I can see clearly that the highest point between these three candlesticks is this point right here. And so therefore, that would be, if I scale in, this would be the high. And this is where we would look for the break of structure. As you can see, as soon as price gets to that point, we create a low, and in order to create a new high, price then goes and pushes up. Now again, we need to now look for another low. So you can see price pushes up and pushes down, and it creates another low, which we can then move this low right here. And I'll actually just delete this so we don't get confused. Now, this is the next low. So I know between 1, 2, and 3 candlesticks again, we now have to find the highest point. In this case, I can push right up to here and I can see, okay, price has pushed up. Now, this is where things get a little bit confusing. In the previous example, it was very obvious that this big candlestick clearly broke above those highs because the body closed above those highs. However, in this case, we didn't get, and I'm going to use my arrow tool so you can actually see, we didn't actually get a body closure above those highs. We actually got a wick closure. Now, yes, you should always follow the wicks and the body 100%. However, when it comes to identifying break of structure, we need to understand that when it comes to breaking a high or a low, we need to have a body closure above. So if I just quickly draw it out for you, let's say we had a high right here and we had two examples. First example is like this. And the second example was like this, where a body closes above or below the high or a low. Let's just say this is just a high, for example. As you can see, the body closed below the high. Therefore, this is an invalid break of structure. In this case, you can see that the body closed above the high. Therefore, this would be called a break of structure or a valid break of structure. Okay. Now, I have a video on explaining what this actually means. It's basically called a liquidity sweep. In my liquidity videos, you'll be able to see exactly how we utilize these liquidity sweeps. But obviously, we're talking about break of structure today, so we need to learn to identify this. So if you go back onto the charts, you can see that because this wick was a high, this wick closed, or this body closed below this previous high, we are going to now, yes, we can call this a new high. Price obviously creates a new high. However, we did not get a break of structure. Therefore, this is still a level of interest. Okay, so we don't know whether there is still momentum towards the upside or not. Now, after this, you can see price creates a downwards push, and this is where the confirmation is that actually the market is going towards the downside. Why? Because if you can see, this low right here is actually a break of structure. So this is why you can see the market continues to push down. And as you can see, we create a new low right here. So this is very, very important because now, as you can see, we had that high get faked out right here, manipulation, price went down, we actually broke these lows, possibly saying that we could be going downwards. However, again, in this case, what does price do? Price pushes up, again, retesting this high right here. And in this case, this is very obvious to us, this is a clear break of structure. So we're going to make sure that we understand that break of structure is when the body closes above. So if this is a high, and when we're creating lows, we need to make sure the body closes below so that that continues the trend, causing it to break structure. This is clearly a high, and so therefore that's why there's a break of structure. And as you can see, price then creates a really, really nice high right here. And then we created a low, which is not as obvious. However, we actually created a low within this candlestick. So this candlestick right here created a high and a low within the markets. And we actually created a low right here. Okay, so why is it that this is not the low? This is the low. Well, because even though we don't have any black candlesticks identifying a low, in this case, you can clearly see that we had a high right here and price came down, and because this wick and this wick is above the previous wick, every time we have a wick, you can see these wicks are always above the previous wick, but this wick right here is below this wick right here. That confirms to me that this is a low, and what follows after a low is a high. And as you can see, we actually broke structure to the upside. And so that continues the trend towards the upside. So again, we created that high, and this time around, we need to identify the low. We follow the market, one candlestick, okay. Second candlestick, okay, this candlestick created a low over here, and a third candlestick right here started to push up. So this again identifies to me that we are pushing towards the upside. Now, again, this high, price never got to this high. What does price do? It creates a new high. This is now called a lower high. So as you can see, this whole move towards the upside, we were just creating higher highs, and now we're creating lower highs. So this for me is a very, very good indication that the market could possibly be going down. Again, I'm not activating as soon as we see a break of structure or a lower high get formed. We are just identifying where the market could potentially be going. So in this case, again, we're now looking for another lower high. And as you can see, price creates a low. But this case, again, the first point of contact is very, very important. We only look at the first point of contact, because if you have a look, the second point of contact was 100% a break of structure, but this wouldn't be the break of structure level. The break of structure level would be at this level because their first point of contact was here. So as you can see, we went down, we pushed up, we created a new lower high right here. And then again, this is the highest point. And then price went down, creating that break of structure. So you can see when we create a lower high, most of the time we're most likely going to look for a break of structure towards the downside, which we get. Again, let's look for another low. We can clearly see price create a low right here. Okay, price started to push up, pushed right up. Now, in this case, did we get a breaker structure? No, we didn't. This looks like a wick. We can actually scale in and have a look. Yeah, this looks like a wick for me. However, internally, we might not realize, but we actually created some sort of structure, because you can see right here, we had a low right here, price went up, continued going up, and then price went down, creating new lows. So if we're creating new lows, therefore, oh, if we're creating new lows, therefore we have to have created a high within that point. And as you can see, we actually created a high as well within that candlestick, which then causes this break of structure, which then gives us that identification that we are continuing to the upside. And that's why the market continued to go to the upside. So again, you just need to follow the markets and and see where the market is going. Usually, if the market is going to keep going up, the wicks are always going to be higher than the previous candlesticks. So as you can see, this wick was higher than these wicks, but this wick was lower than 1, 2 of these candlesticks. Therefore, internally, there must have been some sort of structure that market went down. However, that doesn't mean that is a break of structure, because it's just a wick. It means that the price went down, but it continued to go up. And that's why price went up to this candlestick. And if I just scale down to the lower time frame, you might get a better understanding. Right here, as you can see, it looked like on the 1 hour time frame that we were just going up, but as you can see with this market, you can see price went up, went down, which is exactly why we created this high, and then obviously we have created new highs. So if I go back to the 1 hour time frame, you'll be able to see exactly where the market created those highs and lows. Okay, again, price created a high right here, so therefore we should be creating a low. And as you can see, we had a breaker structure right here. Now, this is very, very interesting, because every time we get a breaker structure, a lot of traders are going to believe that we should enter straight off. So going on to our next point, if I just scale out, how to enter off a break of structure. Now, just because we are identifying breaker structures doesn't mean that's where we're going to be entering from the breaker structure. Usually after a break of structure, you will, if I just draw an uptrend quickly, oh, usually after a break of structure like here, the market is pretty expensive. The market is at a premium price level. So this is actually very, very important for us, because we wouldn't want to enter a buy from this level. Also, we wouldn't want to enter a sell from this level, because we know the market will be pushing up. So what do we do in a circumstance when we identify a breaker structure? So this is where your entry model has to be taking part into this equation, let's just say, once we have a break of structure, we have to follow through with something else. Now, this could be a Fibonacci retracement, this could be the equilibrium tool, or it could be a fair value gap. What I like to pair with a break of structure is a fair value gap. Sometimes I would pair it with a Fibonacci retracement tool as well. I have made videos about both of them. But with regards to this, I always like to use either a fair value gap or a Fibonacci retracer. Most of the time, you'll see I'm always using a fair value gap after a break of structure. So every time we get a break of structure, I am looking for a fair value gap. And once I get that fair value gap, we can then look for entries after that. So even though when we see a break of structure, it's so tempting to buy and sell within the market, you have to be patient. You have to wait, because usually when there's a break of structure, that means there's a lot of volume, there's a lot of, I would say, momentum towards a direction. And so in that case, you need to make sure that you don't enter off a very expensive or premium price or a very discounted price if you're selling. So when it comes to break of structure, we have identified what is a break of structure on the markets. We have identified how to see it, how to spot break of structures. But not only that, we have identified exactly how to enter off them, pairing it with other things. Now, if you do want to learn my entire system, my entire strategy, and you want to get coached by me, I'm actually doing a free 3-day masterclass. The link will be in the bio or in the description. Make sure you check it out. Also, make sure you like, subscribe. If you like these kind of videos, I'm always sharing some sort of insights in the markets. Make sure you subscribe, turn that bell notification on, and I'll see you in the next video.